going to continue, to your guys' points around credit spreads. I'm very skeptical around credit spreads really blowing up much further. I am much more sanguine about that in terms of credit spreads as well, because the technical picture, particularly in US credit, particularly around default rates, both in Euro credit and US credit actually, but also around refinancing needs, around the maturity wall, around index credit quality, all of these things are so much better. So that leaves us with a technical picture, particularly in credit, both in IG and in high yield, so much better compared to 10, 15 years ago. And that really should be somewhat softening the blow, I think, in terms of credit spread widening in the next couple of days and weeks.
Yeah, a lot of talk about how the private markets have taken away some of the more suspect paper, and we have a bond market that's in a better shape. And speaking of bonds, John, I mean, the Treasury bid today has been very strong. Yields have come in. Do you see anything there that's telling us about how that's going to go in the future? Can you actually, hide in Treasuries for a bit?
You probably could a little bit. I mean, the trend really has been sideways for the 10-year, stuck between that 465 and that 410 area. But today's move, I think at a minimum, tells us we're not going to see 4.5 anytime soon. And same with on the short end of the curve. Now, the short end of the curve looks as though it's going to be capped, underneath that 390. My sense is once we see a clean break of the July lows on the 2-year, we'll get down to around 3.5. So yeah, I do think that the short end of the curve it's going to work itself lower in terms of yields. But yeah, heck of a move today, an outlier move, and you got to respect it.
Gotcha. John, Max, really appreciate the time today. Have a good weekend as we head into the close. The S&P 500 is still sitting on about a 1.6% loss for the day. It's been around that area for a while. It did bounce off 6,200. That was the low from last month. The small cap Russell 2000 down 2%, bearing the brunt of that bad job support. Does it for closing bell now. Let's send you over to overtime with Morgan and John.
Well, that's the end of regulation. AB InBev bringing the closing bell at the New York Stock Exchange. The Chicago Innovation Award winners doing the honors at the Nasdaq. This was not a sleepy summer Friday, folks. Stocks in the red. Down day for the major averages. It was a down week, worst week for the S&P and the Nasdaq since May, for the Dow since April. Tech earnings, tariffs, job numbers, political firing, all conspiring to send stocks lower on this Friday. The Nasdaq with the worst day in 3 months. The S&P 500 with its first 1% move in either direction in more than a month today, lower. Bond yields falling sharply, though, on the weaker-than-expected jobs report. And Amazon down big following its results. Apple also lower on